Hi friends, today I'm going to discuss with you about fixed income options. I have heard about fixed income option, you are only aware about fixed deposit as one of the fixed income option. But other fixed income options which you can avail of, which can give you higher returns compared to fixed deposit, is what I'm going to cover in this specific video. And please share it to your friends, relatives, so that they can also get an understanding or get knowledge about what are the other fixed income options available today in the financial world which you can take advantage of. So apart from fixed deposits, there are four other options available where you can derive fixed income. So what are these four options? The first option is your treasury bills. These are issued by RBI on behalf of the government. And why do they issue it? They issue it so that they can meet their short-term obligations or short-term funds which they need to cater various expenses of the government. And then it could also mean that they want to stabilize the markets, hence they issue treasury bills. Now when they issue treasury bills, they issue it at a discount, and when you redeem it, they redeem it at the par value. Hence the difference in the price between the issuing price and the redemption price, that itself will give you what is the returns you are going to get within the specific time period. So that's how you calculate. You check the redemption price, that is the par value, and the today's discounted price, that's a steep discounted price wherein it is sold in as an auction process in the market. So that's how you can buy treasury bills and take advantage of a fixed income, which is the safest income as a matter of fact, because it has a backing of the government. And then you have the second option is your commercial paper. And commercial papers are issued by companies. These are short notes, promissory notes issued by the company, and which will pay you interest rates over a specific period of time. And these commercial papers typically range from 3 months or sometimes going to a year. It could also be more than a year. And depending on the interest rates, you can decide which commercial paper from which issuer you want to select. And be careful that when you select your commercial paper, depending on the rate of return, you also need to check the credibility or the credit rating of the particular company, because that much of risk you will have to take. If you want to go for a high return, the credit rating of the issuer might be a little poor, but take a balanced call, take a cautious call, and if you need help, take a help of a financial planner to decide which specific commercial paper you need to invest your money. So the third comes as certificate of deposits, and these certificate of deposits are issued by banks. So these are issued by banks to the investor. Investor purchases the certificate of deposit, and they get in return some specific interest or coupon rates. So based on that coupon rates, you can decide which bank's certificate of deposit you wish to invest your money with. And the fourth and the last is bonds, as a generic term bonds, and these bonds may be issued by a government, which is the safest. That's the safest investment you can opt for, government bonds, GSEC bonds or T-bills as well. And the returns compared to private bonds could be typically less in case of a government, but they are less risky. Government bonds are less risky, but private bonds, you could also check the credit rating of the private bonds. Depending on the credit rating, you can decide in which bonds, depending on the yield to maturity, whether you want to invest into the specific bonds. You can take your decision. If you want to take help, if you're confused, please drop a comment. Maybe I can help you out, or you can take help of a certified financial planner to help you out to decide which of the bonds you can go ahead with your investment decision. And of course, the investing in bonds also need to go side by side with the interest rates or interest regime at that particular point of time, whether they're new bonds at that specific time and whether they are existing bonds when the interest rates are high. All these things matter when you purchase bonds. So please be cautious when you buy bonds, and this is just an educational video which I'm making so that you are aware. Apart from fixed deposits, you have these other investment options also available when you can derive fixed income. And it could also mean that, compared to fixed deposits, these other streams of fixed income can give you better returns compared to fixed deposits, especially when it comes to bonds, when the interest rates are on a higher side. Bonds could give even more compared to the bank's fixed deposit. So hope you have liked this video, and please go ahead and share it to others as well, so that they can understand what are the different other options which are available in the fixed income portfolio, so that you can diversify furthermore compared to fixed deposit.